Welcome to Retirement Unlocked with Larry Heller. Your life, your way, unlimited possibilities. Join us as we explore how tailored financial planning and investments can help you navigate life transitions with confidence. Let's dive into this week's episode.
Hello and welcome to another Retirement Unlocked podcast with your host, Larry Heller. Wildfires, storms, and cyber attacks, how insurance is adapting with our guest today, Greg Knepper. Now, he's the president of Integrated Coverage Group. He's got over 15 years of experience helping businesses navigate risk with customized insurance solutions. Currently licensed in over 10 states, his experience spans from general liability, professional liability, cyber insurance, workers' comp, and a lot more. He understands the balance between insurance needs and financial constraints faced by individuals and small business owners. All right, Larry, take it away.
Thanks, Matt. Greg, thank you so much for joining us today. I am excited about the topic because it's something we are all seeing on TV and reading about every day, and it seems to be getting worse. And how is that going to affect a lot of our listening audience? So, Greg, thank you. Why don't we just jump right into it, and why don't you guys give the audience kind of a generalization on what's going on in the personal insurance market?
Yeah, well, Larry, first off, thanks very much for having me on your show. I appreciate it, and I'm looking forward to chatting about insurance. With regards to the insurance market, in particular, the personal lines market, has been extremely difficult. Now we're going on almost, I think, the third year of this cycle. As Matt indicated in the intro, I've been doing this for 15 plus years. This is the most difficult market that we have seen, that I have seen in my career, and folks that I speak with that have been doing it for 2 or 3 times as long as I have, refer to this market as the toughest market in a generation. That means that when folks are used to getting an insurance renewal and it goes up 2, 3, 5, 7% and paying the premium and moving on, they're getting insurance renewals that are going up 20, 30, 40, 50%. We've seen insurance premiums double in certain circumstances. Not only that, but also carriers are being much more stringent upon what they want to write, what they don't want to write, where they'll write it. If it's near the water, they don't like it because of wind exposures. Sometimes they just say, we don't like it, and don't give you a good answer. And it's just very difficult. What I've been seeing a great deal is particularly on the personal line side, is that folks have been trained by the household names that we all know to say, hey, you're going to, let us quote your insurance. You'll save 10%. It takes 5 minutes. It has become somewhat commoditized. And so what happens is people, every year or two, they come to their broker or go to their carrier and say, hey, can you shop it around? Can you shop it around? And for about 2 years now, I've been saying, anybody that has come to me with a decent insurance carrier and says, hey, can you save me money on this? I look at it very quickly. I say, who's the carrier? How much are you paying? 9 times out of 10, there's absolutely nothing we can do to save them money. They should stick exactly where they are, which makes it difficult, not only for us, because we're in the business of trying to help people with their insurance, but also people that are used to trying to save some money, and they hear from me and other brokers that they should sit tight because there's no better option in the marketplace.
Let's unpack that, because there's really two things I want to kind of talk about. So before we kind of get into the details about the actual insurance and what you should do and shopping around, let's kind of just go back and start what you're talking about, where people are getting these huge increases, or carriers are not wanting to, to even write. We're all seeing kind of these crazy catastrophe type scenarios going on between not only California wildfires, but Long Island wildfires, and obviously floods and hurricanes and tornadoes. So how is this really affecting some of the local markets? I mean, most of our listeners are in New York, but we have plenty of listeners in Florida. So what are people supposed to do now with how do they protect themselves, and what should they do?
Yeah, so great question. So I'll answer that in 2 ways. One is that oftentimes folks think of insurance as being hyper localized, meaning quite often my clients say to me, hey, I've had no claims, there's been no issues, we live on Long Island, there haven't been any big storms in a very long time. why is my insurance premium going up? Well, the fires in Florida and the floods and wind type claims in the South, North Carolina, South Carolina, Florida, et cetera, everywhere in the country, we're seeing more an increase in frequency of storms and increase in severity, meaning bigger storms, more costly for families, for individuals, and for the insurance carriers. And so many of the insurance carriers are national insurance companies. So what happens in California affects New York. Also, the insurance companies have something called reinsurance. So they have their own sort of insurance companies. And those reinsurance companies are insuring many different insurance companies all over the country. And so what happens in California, again, affects New York. So it's not hyper local like you might think, or like most, oftentimes people ask about. The other piece with that is that premiums are going up for people that are think that back to what I was saying a moment ago, that they haven't done anything wrong. They don't have any claims. They don't live in a high risk area, and the premiums are going up. And really the only thing that we can do to help them with that is try and manage the premiums. So making tweaks in their policies, making changes, changing property limits, increasing deductibles. So there's a few levers that we can usually pull in order to help folks try and save some money while continuing to be insured. Florida is a whole other animal, Larry. I mean, we could have an entire podcast on insurance in Florida if you want at some other point.
Yeah, no. So I mean that's a great point. So it's not just really the premium numbers, but really how you can have these conversations with your clients and pull some of these other levers depending upon what they're comfortable with. Maybe even kind of like self-insuring. So especially in Florida, where people are saying, you know what, I'll take a little bit more risk here on certain areas. So that becomes a much more need for really somebody like your expertise to kind of talk them through what they should be covered or what they're comfortable with. So can you give us an example of maybe a recent client that you've spoken to that you've kind of made some of these adjustments for them?
Yeah. So, I mean, again, self-insurance is a slippery slope. I mean, if you're a homeowner, for example, and you have a home that costs $1 million to rebuild, self-insuring it can be dangerous because, there's a reason why it's difficult and expensive to get insurance in a certain area, which means there's a high chance of a claim and a large claim, which means that if you're self-insuring it, you may very well be on the hook for that at some point. So I always caution folks with regards to fully trying to self-insure their homeowner's policy.
Right. When I meant by self-insurance, I meant not the whole property,
okay.
but maybe self-insuring some of the wind by raising the deductibles or.
So great point. But there are folks that have come to me in Florida and say, I'm just not paying. They have no mortgage, they don't have to have insurance, and they're trying to self-insure, which I think is not the right move. But yeah, so how you're referring to self-insuring or retaining some more of the risk is really the biggest lever that we have to pull. Particularly, we're located on Long Island, although we help clients in many states, again, like Florida. But on Long Island in particular, one of the things that we've been doing is increasing deductibles for our clients. So, 3-4 years ago, most of our clients had $1,000 or $2,500 homeowners deductibles. That means that if they had a claim that was covered, let's just say it was a $10,000 claim and they had a $1,000 deductible, they would be on the hook for the first $1,000, and the balance of the covered claim would be covered by the insurance company. Now the majority of our clients have $5,000 and $10,000 deductibles. Some of our clients in larger homes with larger replacement costs even have $25,000 and $50,000 deductibles. So they're taking on much of that risk, which you have to be in a financial position to absorb a $25,000 or $50,000 deductible, and even a $10,000 deductible. But historically and statistically speaking, and it's been proven time and time again, having a higher deductible, if it's priced appropriately, will save you money over time. What that means is that if we take someone from a $5,000 deductible to a $10,000 deductible, and they save, let's just call it $1,000 a year, chances are they're going to be ahead of the game because they probably won't have a claim that exceeds $5,000 or $10,000 in the first 5 years. I always caution folks that I say, hey, we're going to move you from $2,500 to $5,000. If you have a claim in 6 weeks, you're not going to be happy. You're going to come back and say, hey, Greg, we shouldn't have done that. And had you known you were going to have that claim, you wouldn't have done that. But again, statistically speaking, a higher deductible is typically the better way to go.
And not only just the deductible on the property, but could they even change? This may be more relevant to places that have more hurricanes, but Long Island has hurricanes. So could they change like the wind deductible that only affects the chance of a hurricane? Do you kind of go through that separately?
I do, and I try and remind my clients and educate them on what a wind deductible even is. I would venture to guess, Larry, that most of the folks that are listening, watching this podcast, don't even know what a wind deductible is. And if they live on Long Island or they're in Florida, they have a wind deductible on their policy. And so, different carriers defined wind differently. Some is a wind loss, so any wind that causes a loss. Some it's a hurricane deductible, so it has to be a hurricane and named storm when it makes landfall in your area. But generally speaking, just from an educational standpoint, what that means is there's a separate deductible. So if you have a hurricane and it rips all the shingles off your roof and a tree falls in your house and it's all related to the hurricane, you're subject to a different deductible than your main deductible. And so on Long Island, oftentimes we'll see someone with let's just say the house costs us $1 million to replace. You'll see somebody with a $5,000 deductible. So if a pipe bursts in their home, $5,000 deductible. And then they'll have a 5% wind deductible, which means 5% of the replacement cost, which is $1 million, which translates to a $50,000 deductible. Most folks do not have any idea that they have this on their policy. My clients do. I try and tell them, but it's on their policy. So if a tree falls on their house due to wind from a hurricane that made landfall, and it causes $100,000 worth of damage to their house, those folks that have that policy are on the hook for the first $50,000. So it's something to be very cognizant of. So to answer your question more directly, some of our clients have a 2% deductible. So in that scenario, they would have a $20,000 deductible. That's another lever that we can pull to go from a 2% to a 3% or a 3% to a 5%. Again, clients taking more risk. It's a gamble. We don't know. If somebody goes from 2% to 5% today, and we have a big hurricane this summer, they're not going to be happy. And it's a big dollar amount. We usually try to reserve those types of increases for folks where there's no other lever to pull and they really need to save the premium, because frankly, I'm more comfortable having someone go from 2,500 to 5,000 or 5,000 to 10,000 than 20,000 to 50,000, because that's a really big chunk of money to come up with.
Yeah, but that's also good to have a person that really can discuss this. And sometimes these bigger carriers, their client says, well, how can I save money? And they just find different ways of saving money and don't realize it. And it's too late. I remember there was a storm a few years ago, and people wanted to know exactly what the wind was, because if it was above a certain wind, it would hit the hurricane deductible. And if it wasn't, it was below it. And I think there was a whole big to do on what the actual wind was at that particular time. I don't know if you remember that.
I don't remember exactly what you're talking about, but I remember Hurricane Sandy, which was in 2012, October of 2012. And there was a big deal whether it was a hurricane or not when it made landfall, because the insurance carriers were trying to argue it was, and because they'd rather everyone have $50,000 deductibles or 20 than 2,000 or 5,000. It turned out, and there was litigation about it, but when that storm hit landfall in New York, in the 5 boroughs, on Long Island, in New Jersey also, it was not technically a hurricane. And a lot of the damage from that storm was actually due to the storm surge and not the wind. And so it wasn't great for insurance carriers, but the individual that had insurance and made claims, it worked out better for them because it wasn't classified as a hurricane.
Right. Great point. Great information. Let's kind of go back to the original, for one of your first original comments when talked about people that are kind of shopping around for insurance, and what are some of the things that they should know when they are shopping around?
Yeah, I think insurance, like pretty much anything else people buy, products, services, etc., for the most part, you get what you pay for. And there are certain things that have been commoditized. Personal auto insurance has basically been commoditized. If you go to Allstate or State Farm or Geico, all these online, what are called captive companies, you're pretty much getting the same product. But when we start to get into more of the homeowners insurance, and definitely on the commercial side, you get what you pay for. The high-end personal lines carriers like National General and Pure and Chubb and AIG, they just insure things differently. And so you could have one home that's insured with Allstate and you can have it insured with Pure, and the way that these carriers respond to claims is vastly different. So it's very important to be cognizant of changing carriers, understanding what you have, what you don't have, how carriers handle their claims, and just trying to move to maybe save some money is oftentimes not the best way to go about it.
Yeah. Especially on the home, maybe the car, not as much, but especially on the home. So, so I guess a lot of these companies, they want you to group all their coverage together. So, and I sometimes I speak to clients and they just a lot of times focus on the premium. And so they'll be with a big carrier for the car and then they'll move their home there. And I don't know if they always really understand that. So is grouping coverage with one carrier, does it end up really being the best for everybody?
Yeah, so like most things, it depends on the exact scenario. The carriers want what they call bundle insurance. They want your home and auto, umbrella, and jewelry, and they want to insure it all because they want more business typically. And so they give you discounts for bundling them. And so sometimes it's great and it works well. Sometimes it's not the best scenario. In your example, I think a lot of times what happens, and we see this all the time, is somebody will have all of their coverage with a certain carrier, and then they say, "Oh, well, I'm with this company, and I got a better rate on my auto," and they move their auto, and then 2 months later they get a bill from the other carrier that insures their home and says, "You just lost your 15% credit on the home because you moved your auto." So it's important to look holistically and see what's going on there. There are some carriers. One carrier that we write a lot of business with, back to kind of what I was saying earlier. The carriers are being much more stringent. They want, it's got to fit in this perfect little box, or they don't want to write it. We have one carrier now that does a great job. They're very competitive. It's a great option if it works, but they will only write homes on Long Island if they're single family homes, and they write 2 automobiles and an umbrella for you. And so it becomes difficult. We have folks that are moving out from the city to Long Island. They have no cars, or they have one car, and we want to write it with them. Everything is perfect, but if you don't have 2 cars, they won't write it. So, we have to play, within the bounds of all the nuances of each of the carriers.
Yeah. I mean, that's why it's so important to work with somebody who's got great experience. I just want to touch on one item. You mentioned umbrella coverage, and kind of, this is one of the things that kind of I didn't know about a few years ago. And since when I found out about it, I always ask my clients this comment. A lot of times they say, I have no idea. And that really has to do with uninsured motorists. So I can't really talk to somebody in the business without really kind of letting our audience know what an uninsured motorist is and kind of what they should be on the lookout for. So can you kind of let everyone know about that?
Yeah, sure. So I often talk about uninsured and underinsured motorists in the same conversation as hurricane deductibles, because they're 2 of the most misunderstood and underexplained types of coverage. So I'm glad you're asking me about that. So there is a type of coverage both on your auto policy and an umbrella that you can have, which is called uninsured and underinsured motorist coverage. You can be out on the road, whether you're on Long Island, New York City, Florida, wherever it is, and the person in front of you, behind you, next to you may have no insurance at all, or they might have the New York State limits of $25,000 of liability. So if you get into an automobile accident with somebody that has no auto insurance, and let's say it's their fault, they rear-end you, you're stopped at a red light, they rear-end you, 100% culpability on their part, and they should be, and unfortunately you get injured, you go to the hospital, maybe you need surgery, and they should be, their insurance company should be paying you $400,000, a very, quite large claim. But they have no insurance, and they also have no assets. So where does that leave you? Now you can use your own auto policy to pay for those under the uninsured, underinsured motorist coverage. Now, again, you can elect $25,000 there, and I won't name the company, but there's a very large auto insurance company that always comes on their ads and says, "What do you want to pay? Name your price." Mm-hmm. And if you name your price and it's a really low number, chances are you're going to have state minimum limits in New York of $25,000. So always recommend.
Right. So so just to clarify, this is somebody now hits you And like you said, the limit is 25,000 on their policy, but now if you have uninsured motorists, it would be covered under your own policy. So you really want to know what your own policy is going to cover for this.
Exactly. So if you had what I typically recommend over $250,000 of uninsured, underinsured motorist coverage, that's going to cover most claims. And if somebody hits you that doesn't have the right insurance, then you're in a much better position. And then to take it one step further, if you have an umbrella, which certain folks should have, you can also have excess uninsured, underinsured motorist coverage, which will give you, typically carriers will give a maximum of $1 million of uninsured, underinsured motorists. So if you have that on your umbrella plus your auto, you could have up to 1.25 million of uninsured, underinsured motorist coverage. Again, something to look out for. Many of the big companies, like Travelers is notorious for it. They'll offer you an umbrella. They don't offer uninsured, underinsured motorists quite often. So you get this umbrella, you think you have an additional million or 2 or 3 million of liability, which you do, but there's no uninsured, underinsured motorists. So whenever we can, we try and help our clients to make sure that they include uninsured, underinsured motorist coverage.
Yeah, because I mean, we all hear the stories. People unfortunately have some severe car accidents and need a lot of medical coverage or need a lot of PT, physical therapy afterwards. So it can easily
lost wages as well can potentially be covered there. I fortunately haven't had too many of those claims in my career, but I had one, it's probably 6 or 7 years ago now, where this person actually wasn't even in their own vehicle. They were in New York City, in Manhattan, walking in the street in a crosswalk, and a black livery cab hit them, had state minimum limits of 25,000. Unfortunately, this woman had, I don't know, at least one surgery, multiple hundreds of thousands of dollars claim. And she was walking, and her uninsured, underinsured motorist coverage covered that claim as several $100,000. So you never know. Same as any insurance, you never know when or if it's going to happen, and that's why it's important to be covered properly.
Yeah, but that's interesting. No car, but she was able to get uninsured motorists through umbrella. So extremely important. Before we finish up, one area I kind of want to switch gears a little bit to. I don't know if it covers really individuals, maybe more business oriented, but with the world that we're living in, the tech world that we're living in these days, and we're seeing more cybersecurity attacks. Is that something really individuals really need to worry about? It's really more businesses.
Yeah, I was actually just talking about with someone about this earlier today, and that everyone needs to worry about it, individuals and businesses. Unfortunately, there's not a great affordable product in terms of insurance for individuals. There are a couple of carriers that are writing it. It's just too expensive. I mean, one of the ones I looked at, I don't know, 3 or 4 months ago, it's like $1,500 for a policy, and it's just expensive for an individual. That's annually. So that really hasn't gained too much traction. What I would say is, separate from the insurance side, it's just very, very important these days to have the proper, online hygiene, protecting your data, having correct, good, strong passwords, different than the passwords for your other online logins, using multi-factor authentication. I mean, all of these things it's just so important, not having a spreadsheet with all of your logins and passwords. I highly recommend using some of these password managers now, LastPass or 1Password.
We use 1Password, yeah.
Yeah, and it works really well. The passwords are much stronger. You can even share passwords within an organization that way, and you're not emailing them so you can easily change them. So I highly recommend them for individuals. And then there's the same, in the same context for businesses. I mean, being careful, not opening emails if you don't know who it's from, not clicking on attachments, having updated antivirus. All of these things are just so important. The multi-factor authentication is paramount. All businesses, 1 employee, 50 employees, 500, 5,000 employees, every business should have cyber insurance at this point. It is affordable for businesses. You should have it. We see more cyber claims. Other than workers' compensation, we see more cyber claims than in any other space. It is pervasive, and you just have to be on guard in all aspects of your online presence, and your money, transferring money, protecting your bank accounts. It's so important.
Yeah, that's our world, and we can have a whole conversation on some of the things that we've seen and scams that are that are out there with people stealing businesses' identities and coming in with their own escrow accounts. It's a crazy world out there.
Yeah.
So that could be a whole nother separate podcast. So Greg, I mean, there's a ton of information for listeners out there, and I think everyone that has listened to this or is watching this has learned something. Any final comments you want to make?
I think it's important for people to be patient with the insurance market these days. I think it's starting to turn, and I think in the next, hopefully next 6 months or so, I think people will be more, hopefully we see some rates come down. I would just say commercial, personal, like I already mentioned, insurance is very important to have. Get what you pay for. It's important to work with an advisor like me that is an expert that can help you, and you don't have to pay me, right? We get paid by insurance carriers. You pay the same amount whether you work with a broker or not. Work with an independent broker that knows what they're doing, that has the experience in the space that you're in.
Yeah, so important. Greg, thanks for joining us. If someone wants to reach out to you, what's the best way of them contacting you?
Yeah, sure. So the name of the company is Integrated Coverage. Our website is www.icgrisk.com. My email is gknepper@icgrisk.com.
Great. Thanks so much again for joining us today, Greg.
Yeah, it was my pleasure. Thanks so much for the opportunity. Anytime.
Well, here's the deal, everybody. Working with an independent insurance agent is a lot like working with an independent financial planner. Everything is on the table. Just like Greg, Larry has access to all sorts of products and services that if you're working with a captive or a broker, they don't have the same sort of stuff. So this has been a great episode. Greg, thank you very much for all of your thought leadership here. This is one of those episodes too, everybody, that you know as well as I do that there are people who really need to know about this stuff. So clicking that share button makes everybody happy. Make sure that you go to integratedcoverage.com to find out more about Greg, and of course, Heller Wealth Management to find more about Larry. And for Larry and Greg, this is Matt Halloran, and we'll see you on the other side of the mic very soon.